This time it's different, right? It's different, isn't it? It's really different. No, it isn't different. What's up, everybody? It's your boy Crypto Bobby. Hope you're having a great day, great night, wherever you are watching or listening in from. A lot of good things to talk about today. We have KIN/KIK getting into a battle with the SEC that has a lot of large implications for really anybody who's done an ICO in the past in the United States, as well as for the potential future of ICOs and regulation there as well. Also, we got Liqui shutting down. Liqui is liquidating. But good one. Nope. And then lastly, we have Link pulling back pretty heavily. And want to just talk about that because it's something we talked about a few days ago, really. And there were a lot of people that were super excited about it. It had gone up 400% over the past few months, basically throughout a bear market, really defying gravity. And then in the past couple of days, we're down about 30%. And we can talk just how looking at this scenario as a whole can teach us a lot about, I think, human psychology when it comes to cryptocurrency, as well as how you can just kind of be smarter and better in the industry as a whole. So let's get into all of that and more today. If you are new to the channel, hit that subscribe button, hit the thumbs up button, helps get this video out to as many people as possible, and I really do appreciate that. And if you're listening on the podcast, whether that's Spotify, Apple, Google Play, whatever it might be, really do appreciate having you on as well. So hopping into it, this is, I think, really big news that's going rather underreported. And this was came out yesterday, was updated today. And KIK, which is the chat app behind the KIN token, they did a $100 million ICO in September of 2017, raised a bunch of money. Their CEO is Ted Livingston. They had a report with the Wall Street Journal that came out where they are claiming that the KIN, their token, works as a currency. It is not an unregistered security. And they are essentially prepared to fight the SEC over possible legal action. So what does that mean? All right, let's hop into it real quick now. So the SEC got in touch with KIK after they did their ICO, and they reached out and said that KIK had indeed violated securities laws, which is a no bueno. You don't want to violate securities laws. KIK responded to the notice last month saying that their ICO actually had no fraud, and the claims that the SEC put forth unjustifiably targeted a company that made substantial efforts in good faith to comply with all existing laws and regulations when selling KIN in September of 2017. So why is this notable? It's just another ICO that might be in trouble with the SEC, right? Wrong. So this is notable for a couple different reasons. Well, the SEC has done something in the past, which is essentially targeting really crappy ICOs that they know that they could really kind of beat up on and set precedent, or set legal precedent through the targeting of pretty crappy ICOs that have made some dumb mistakes. You have Paragon Coin, which was the one where you had, the game, and you had like a former Miss Iowa talking about we work for weed and talking about making profits and distributing profits. You had Air Token. You had Ether Delta as well, which was a decentralized exchange that I'm sure a lot of you are familiar with, but they got nabbed Ether Delta for selling securities, presumably ICO tokens on the platform. And this is all notable because those were essentially layups. This was the opportunity for the SEC to really get some quick wins against companies that they knew really couldn't realistically fight back against the SEC. Now you have KIK, whatever you want to call it, we'll call KIK. You have KIK coming out who did a $100 million ICO. They have very large VC investors in Silicon Valley as well as elsewhere. They also have a top quality legal firm, and they're coming out and saying, you know what, we're not going to, rather than function like Paragon or like Ether Delta or like Air Token, those companies all settled with the SEC. They said, you know what, we're not going to fight you. We're going to settle. We're going to pay whatever fines. We're going to have to reimburse money or do whatever we got to do, but we're not going to fight this because we just don't think we can win. KIK is saying, hey, we think we can win. And they literally say, KIK and the KIN Foundation are prepared to litigate and are confident that they will prevail in court. So they're ready to go to court. They're ready to litigate. And they're basically saying, you know what, we're not going to get bullied into this, which is notable because this is the first large ICO or notable ICO that is saying, hey, we'll fight back against this. And why does this matter just in general? Well, it matters because if KIK prevails in court and wins, that will set a precedent for all of the other, US ICOs or just companies that ICO and sold to American investors or whatever it might have been. That'll set a precedent for them that will provide some level of framework. If they lose, however, that's really bad news. Now, I don't think that the ICO industry as a whole will ever come back to the 2017, early 2018 heyday. I really doubt that will happen, but this will be interesting for the existing projects in the space and potentially for future legal framework. So I do think this is a scenario and a situation that is definitely worth watching play out in real time, because the implications for what happens are quite legitimate. And I do think pretty substantial. Now, in addition to KIK, we have Liqui, which is an exchange. Some of you may have used it. If you got into crypto, let's say in 2018 or late 2017, you probably didn't need to ever use it. But say early to mid 2017, this was one of the exchanges that was one of the first centralized exchanges typically to list ERC20 tokens that did ICOs. And they are really closing up shop at this point in time, allowing users to withdraw their funds. I was trying to find historical volume for Liqui. Right now, the volume is at $70,000 a day, which is pretty small. So you would think that a lot of the shutdown simply has to do with the lack of traders on their platform, the lack of people that participating in their ecosystem, the lack of money they're making from withdrawal fees and trading fees. Is probably just not profitable to make money anymore from Liqui. And traders have moved on to other places, and they've also left the cryptocurrency market in droves. One notable thing about this that I at least like at surface level, and we'll see what ends up happening with this, if this is clean or not, but if they're just shutting down, allowing users to withdraw funds and go about their merry way, that's a no harm, no foul thing. It's good to see. It's a lot better than a lot of times you see these exchanges that aren't making money and they're losing money and they're getting hacked and all this crazy shit, and then they end up costing users funds. If users are able to draw everything out that they need to withdraw, then this is a pat on the back, good guy. Liqui sucks. Really unfortunate to see your business no longer exist anymore, essentially. But the fact that you haven't hurt customers by doing so, I think that's an admirable thing to see. Another thing that I think we will continue to watch for is more exchanges, more infrastructure providers really going out of business. This is the longest bear market in crypto. This will be the longest bear market in cryptocurrency history, in my opinion. And it is, there is right now a number of companies that scaled up pretty significantly during the bear market or during the bull market and are not able to keep pace either with costs, with revenue, whatever it might be. There's going to continue to be a pullback, just not in terms of the charts in general, but crypto as a whole too. Now, lastly, I want to touch lightly on Link here. And we've talked about Link, I think, twice in the past week or so. Link was up 400%. I tweeted about it on, let's see if I can pull it up here. I tweeted about it on January 22nd at 11 a.m. Eastern time. Link at the time was at 15,452 Satoshis. So Link was mooning. It was at the top of a daily green candle. It was absolutely crushing it. And I said, now might be a good time to take profits, Link Army, sheesh. And by sheesh, I was like, just impressed. Like the fact that Link had done what it had done in the middle of a bear market, really from August into January, it had done nothing but go to the moon. And that's obviously pretty damn impressive. And there were a lot of people that pushed back on that and said, hey, this is a different cryptocurrency. This is something that the token economics of this, the mainnet, everything that's happening with this cryptocurrency, it is different than everything else. And we are not taking profits. I am not taking profits. I'm not taking profits till it's $1,000. I'm not taking profits till it's $5, $10, whatever the hell it might be. I'm not taking profits because this cryptocurrency is different. And there was a lot of people pointing to, what happens if you sell Bitcoin at $50? What happens if you sold Ethereum at $1, $2? Yeah, you lost out on a lot of profit. But there's also, for every Bitcoin and for Ethereum, There's also a number of other cryptocurrencies that have absolutely skied up and then fallen back massively, significantly, hugely. And this is a really interesting case in just human psychology, because as crypto prices go up, people become more and more and more psychologically attached to their cryptocurrency. And when you look at it, you buy something and it goes up you buy something because you have, maybe it's a fundamental degree of conviction in it. You think that something about it is good. You have these fundamental beliefs in that cryptocurrency. It goes up 100%. Nothing fundamentally is likely changed about that cryptocurrency, but your fundamental feelings about that are now like 2, 3, 4 times stronger. Then it goes up 300, 400%. You now think that you are the smartest investor on planet Earth and that this cryptocurrency is never going to go down again. I've been there. I know what it feels like, and I'm sure a lot of you listening have been there as well. Unfortunately, for every Bitcoin and Ethereum, that's probably 1 out of 100 chances. You are more likely than 99 out of 100%. That's my opinion on this, and I think that when you look at something just going up and defying gravity across the market, it is never a bad thing to take profit. It is never, ever, ever a bad thing to take profit. Nobody's ever gone broke taking profit. And buying something, it's one thing if you got in early and you're up a few 100%, but also buying something when it's up 300 to 400% is absolutely ludicrous in the crypto market. And I would highly not advise against doing something like that. And we've seen it, and I don't want to pick on Link. It happened really quickly with both GRIN and Beam, the two Mimblewimble new mineable cryptocurrencies. Happened really quickly with those. They both basically 2 to 5x'd and crushed it very quickly. So this is not a point and speak badly about Link or anybody that's invested in Link. It's certainly not what I'm thinking about. It just goes to show that human psychology is a really important aspect of this. And depending upon where you get in, you can get burned pretty badly. And, from the time I tweeted about it, super big humble brag, it's down 31%. So you want to just always be aware and try to remove the human emotions out of these decisions as much as possible. It's incredibly emotional because there are so few fundamentals. And, Chainlink might be a fantastic project. I think it is a really big need for the industry. Having Oracle and having Oracle's having data come in from outside of the ecosystem into crypto, into blockchain technology and Ethereum and potentially other blockchains, it's huge. It's massive. But you just have to not be afraid to take profits and not be afraid every once in a while to maybe miss out on the next Ethereum at $1 because 400% is pretty damn good and pretty damn feasible, I think, for a freaking wonderful, wonderful investment. So hopefully that provides a little bit of color just as far as my thought process when I look at that, because we have seen a pullback, and I do think it is an educational thing. And not only that, but you also have things recently like Hollow, Hot, which rocketed up to the moon, absolutely crushed it, and was was something that was pretty massive there as well. So hopefully you guys enjoyed this video and learned something. Like I said, keep an eye on KIK, keep an eye on their action with the SEC, on any other exchange like Liqui. Also goes to show Liqui is seems like, pretty good and, helpful for their users, but not every centralized exchange might be like that in the future. Something to think about in the long run. Don't keep your crypto on centralized exchanges. Not everybody might not be as helpful as Liqui. And then lastly, taking profits is never a bad thing. Whether it's Link, whether it's GRIN, whether it's Beam, whether it's Hot, doesn't matter. Taking profits is never a bad thing. Hope you enjoyed this video. Hit that subscribe button if you did. Hit that thumbs up button if you really loved it. Appreciate the time. Crypto Bobby signing out. Hope you have a good one. Peace.